Assalamualaikum. So today me and my group mates, Muhammad AMIR Hakim bin Shaharuddin, Abdul Aziz Al-Hadi bin Muhammad Suni, myself Nur SYAZWANIE HIZNIE binti Patihi and RADEN SOFEA ARISSA binti RADEN Malaysia. We'll be talking about short-term loan in financial management, and we are from DIA 5A. So there's a lot of short-term loan. One of the sources of short-term loan is trade credit, which it was a significant process of financing for business, and then it refers to credit extended to a client in the usual course of business by a provider of goods or service. And then it was also a business agreement that allow a client to purchase things without paying cash up front and then pay the supplier later. And then lastly, trade credit provide customer 30, 60 and 90 days to pay, which is its period. Okay, next.
So the second point for sources of short-term loan is first, unsecured public deposit required general publics to support their working capital. The second main point is public deposit deposit made by company members or directors, as well as the general public at a predetermined rate of interest for a set period of time. The third point is this method of obtaining cash become more widespread when bank credit become expensive. The last point is a corporation can receive a public deposit for a period of less than 6 months or more over 36 months. Next is commercial banks. Commercial banks is a primary responsibility is to make business loans. Banks provide a range customized loans such as loans, overdraft, cash credits, bill buys, and letter of credits to fit the specific needs of a business. A commercial bank is a type of a financial institution that handles all deposit and withdrawal activities for the general public. In addition, to provide investment loans and other services. The last main point is commercial bank benefits from the loans that they provide and earn interest on.
So I'm going to explain about pros and cons. So first is trade credit. So I'm going to explain about pros first. So its ability to receive a discount for quick payment that complete in certain of day under credit agreement, and also allows us to keep our company shelf stocks or a product manufacturer without having to spend a huge chunks of money upfront. So for cons, it's lost a trade credit privilege, and vendors are not required to provide trade credit to the firms, and also fines and penalties. Suppliers may offer discount for early payment, but if we pay them late, we may be charged for cost and also penalty. So next, about public deposit. So the pros is lower rate of interest as compared to the rates imposed by commercial banks and financial institutions. This benefits the company they promote trading on equity. If the business earn more than the rate of interest paid on the deposit, public deposits can assist with trading on equity. So for the cons of public deposit, it was complained prioritize alter credit distributions preference and soften the sharpness of monetary policies, notably the expensive money policies, and also they are an unpredictable sources. The approach is problematic since it is hard to predict whether or not the business will be able to secure adequate deposits.
So next I will talk about the pros of commercial banks. Commercial bank in charge of economic activities, business administration and handling can become more easier. Next, the ability of commercial banks to support small companies by making day-to-day financial activities easier to handle. About the cons is the commercial banks account are typically more expensive than ordinary bank accounts. Other than that, some services may not be necessary for our business, yet we will get paid for them since they are included in the package. After that, we have already made some research for the best source to obtain additional capital. We chose commercial banks because of they have superior banking technologies. They also offer a dependable feedback mechanism. And also they offer a diverse variety of services and distribution. And lastly, they provide saving options. So that's all from us. Thank you.